Good morning. CRE borrowing costs drop as debt markets loosen in 2025. So, after 2 years of high volatility, the commercial real estate or CRE debt markets are finally loosening. And borrowing costs are dropping, rates are down, and lenders are re engaging. Capital's flowing again. For investors and property owners, 2025 and beyond is shaping up to be the most favorable financing environment since early 2022. And here's what you need to know and how Medallion Funds helps you capitalize while this window is open. So, Fed rate cuts, one coming in December most likely, are reigniting CRE lending. And the Federal Reserve delivered two rate cuts in 2025, bringing the overnight rate to 3.75 to 4. Even with the 10-year Treasury hovering around 4.1, borrowing costs for commercial loans have pulled back significantly because spreads have compressed and lenders are competing for deals again. Borrowers are now seeing some better terms. So, agency multifamily debt in the upper four range with some discounts. It's amazing to see that again. Life company loans in the upper four ranges, bank loans in the low five to low six range for highly competitive assets, as high as 6.5 for smaller deals. CMBS execution is somewhere between 5 and 7%, and debt funds and bridge loans are likely going to be between 6 and 8%. And this is meaningful. CRE interest rates are down nearly 50 basis points year over year. And basically, what that means is banks are re entering the market. 2024 was a cleanup year for banks. Many banks spent the year repairing their balance sheets, increasing their reserves to meet with new capital requirements, and navigating regulatory pressure. But in 2025, they're stepping back into the ring. And here are a few highlights. The bank share of CRE loans over 2.5 million rose from 27% in 24 to 33% in early 2025, which is still below the pre-2020 norm of about 40%. So, meaning there's room to grow, but there's also been growth happening. Liquidity is improving as regional bank stress eases, and the Fed's injected a bit of money in that category recently. And the regulatory tone has softened since mid-2024, and the CFPB may be going away. This bank thaw is one of the most important drivers behind lower borrowing costs. So private lenders and debt funds are now flooding the market. While banks paused in 2024, private lenders stepped in and filled the gap. And now they're doubling down, which I think makes the banks more eager to compete. Debt funds raised $24 billion in the first 3 quarters of 2025, more than double last year's pace. And what's their focus? Bridge loans are the primary focus, but also value add projects, repositioning, and transitional assets. Occasionally, you'll see some construction to perm structures. And why? Because they underwrite with more flexibility. They help push spreads lower across the entire CRE ecosystem. So more competition, lower rates. Pretty simple. Rate snapshot for Q4 of 2025. So we're going to look at the lender type, the rate range, agency multifamilies, upper fours, lower fives, life companies, upper fours, lower fives. Banks are, it says 5 to 6, but I think it's probably upper fives, lower sixes. CMBS, mid 6 to 7, debt funds 6 to 8, maybe a little higher. But the Fed's path is not guaranteed, so the timing is now. We need to act. Markets originally priced in a 90% chance of another December rate cut, and that cut has dropped to about 70% now. The Fed remains data dependent, and inflation progress has slowed. However, growth is steady but not guaranteed. Borrowers should see today's environment for what it is. It's a window and not a guarantee, and they could close. So the message here is it's time to borrow while the market's open. And CRE is not cheap compared to 2020 or 2021, but financing today is the best it's been in years. With lenders flush with capital and spreads are narrowing and competition is increasing, borrowers have a real opportunity to lock in favorable terms before the next cycle shift. And at Medallion Funds, we're structuring a lot of different deals, and here are some ways we could help you. multifamily projects, industrial projects, multi-tenant retail deals, multi-tenant office deals. We also see some single-tenant office space for owner-occupied users. Look at a lot of mixed use. And we do construction where a lot of folks shy away from, and we definitely have bridge to perm products. Across 600 plus lender relationships, you have more to offer is the point here. So if you're exploring a refinance, a purchase, or a bridge loan, now is the time to move. And that, my friends, is it for the day. I'd love to chat with you more offline if you want to talk. My website is billrapponline.com. There's a lot of free websites or free tools, but you can also schedule a consultation if you want to talk more. That is it for the day. Hope you have a good week. We'll see you Monday.